guest is also on the show. Opinion now coming in from Samir Arora of Helios Capital. He says that he is not particularly bullish on the market currently, while Sanjay Dutt of Quantum Securities says that Indian market will hit new highs, but with different set of stocks. Let's hear him out.
I am not very bullish, although my positioning is bullish. But I can change at short notice, primarily because it's a bit too much to believe that what has happened in Europe is something for just a 1 or 2 week period. So I think relatively we are well placed, because relatively our differential growth rate and the fact that we have some reforms going on and the fact that we have had 2 bad years, which many other markets may also have had, and the fact that our interest rates are quite high, so you can't imagine that they will go up or any other such thing. So yeah, relatively I think we are pretty good. To continue, and we have to do GST, and monsoon is very important. GST will not change earnings for at least 2 years or maybe even more. I think like 3-5 years to really change everything in India. It can't change just because the bill has come.
In this global canvas where you are seeing kind of everything so haywire and you can't really game it, as an investor, domestic investor as well as an investor who has to have emerging market exposure, it leaves me no other choice but to have India in my portfolio. And when I look at India in my portfolio, obviously then I start looking at domestic-centric companies. So, that's the reason why I feel the markets in India will continue to do well. Markets would have been much higher had it not been for all these uncertainties and Brexit, etc. So on every dip, this market would be bought into. And it may not be the index where you'll end up probably making huge money. You may not see the index at 9,000, 6 months or 3 months down the line. But you will be seeing select stocks giving you a stupendous 30, 40 or 50% return in 6 months. I think all inward-looking stocks, that is basically inward-looking towards the economy, whether it's infrastructure, cement, selectively steel, they all are looking good. And particularly these mid-cap infra who are going to get contracts and they're going to get phenomenal traction in their margin, as well as their balance sheets are relatively better off than the bigger ones. They are the ones who really reap the benefits. Yes, selectively PSU banks should be in your portfolio and are a real big long-term story. So you can't game them for the next month or two, but if you want to really play something from a 2-3 years perspective, I don't see any reason why you shouldn't have good quality PSU banks in your portfolios.
All right.